Hello and welcome to my brand new channel called The Last Investor. My name is Dan, and this is my story really. For a very, very long time, I've been lost in the financial sense. I didn't have any savings, but now I've come to realize the hard way that I need to save for my future. So I've started to do a bit of research online. And then I came across this principle called value investing. Now, this is a principle that I seem to have picked up from very important investors in our history, people like Warren Buffett, Charlie Munger, Benjamin Graham, and Peter Lynch. I mean, these people have got huge wealth of knowledge, so I've read up on them, I've studied them, listened to a lot of their interviews and videos, and I feel that I wish I had learnt about them sooner than later. But as they say, it's never too late to start, hence why I'm called the last investor. I'm now on the long, slow road from a careless spender to being a prudent investor. So this is all new to me. Just a little bit about my fund. I started this fund in July of this year, 2019, from zero. And as you can see on the screen, my balance is £682.26. And that was from an initial investment of £700. So, of course, as you can see, I have lost some money, but I'm very comfortable about that, as this is a pretty much long-term portfolio and long-term outlook. So firstly, let me just start off with the platform. This platform is called Freetrade, and I chose this platform because, of course, it is free. Basically, trades get executed at the end of the working day, which is absolutely fine for me, and it suits my strategy. And also, very important thing for me is the fact that it also allows for me to save using the ISA account. So that's very important for me because in the UK we all have a £20,000 a year tax-free savings, which means we can save up to £20,000 in any calendar year, and all of that amount saved is tax-free. It's almost like a wrapper, so that's brilliant. So I intend to use that to ensure that I can keep as much money as I save in my own pocket rather than giving it to the government. So that suits me fine. So if you are saving already and you are not making use of your ISA allowance, I suggest you do so, and this is a brilliant way of doing it without it costing you an arm and a leg. Prior to opening my Freetrade account, I had tried to use Hargreaves Lansdown, which is also a very brilliant platform, but unfortunately it just wasn't good. It just wasn't right for me, because as far as trading goes, if you were to place a single trade for a share, you'd have to pay £11, or I had to pay £11 or thereabouts just for that single trade. Now, take a scenario where, for example, as you can see here with the renewable infrastructure, I bought 190 shares, which was roughly around, as you can see here, 190 shares I bought for in total cost of £247.84, and that would have cost me £11 for that transaction, whereas on Freetrade it's absolutely free. So that's £11 that stays in my pocket and goes towards my investment. So Hargreaves Lansdown simply wasn't a platform that was suitable to my type of investing. Well, if on the other hand you have a really large portfolio, or you have a war chest, and you can invest, let's say £10,000, £100,000 per trade, then of course that may well suit you down to the T, and you're probably better placed using an organization such as Hargreaves Lansdown. But for me, that just simply wouldn't work. Now, just to talk a little bit about my investment type. My main type of investment is going to be dividend stocks. That is what I aim to do, and the reason why is because I am looking for passive income through those dividend payments, and I'm also looking for capital growth, although at a moderate level. I will be employing a 4-rule strategy in picking my stocks, and those 4 rules I've learned, as I said, from people like Warren Buffett, Charlie Munger, and just basically all of that wisdom that I've taken on board and I've assimilated. I've basically distilled them into 4 rules, which I aim to follow rather religiously. So that is the aim of this portfolio. If that sounds good to you, then please do subscribe, because I aim to take you through a journey on a week-to-week basis of how my portfolio is building, how I add money into my portfolio. My aim is to invest £200 per week. So every week I would show you how I make my choices in investing and how I make my choices in picking stocks as well. But just to talk very, very quickly and briefly about the 4 rules that I use. The first one basically is balance sheet and cash flow. So I'm aiming to look for a very, very good, strong balance sheet and cash flow. And I'll talk to you a little bit later about that. The second is earnings, equity, and dividend growths, which I refer to as the 3 growths. That's very, very important. And the third rule is competitive edge. Think of it as a moat. If you have a castle, you have a body of water surrounding that castle. That's a moat. So basically, prevent other competitors from entering into your industry and steal your customers or the people that you sell your services to. So that is the importance of having a company or stock which has a strong competitive edge. And then finally, intrinsic value. And here is very important for me that the stocks that I purchase them at value rather than buying overpriced stocks. And that effectively means I have to understand how to price a stock. And I've learned as much as I can, and I hope that I apply those rules in a sensible way. And I'm sure those of you who are very experienced in the stock market will no doubt correct me if you spot some errors in my ways, and I'm more than willing to learn. I've only just started this and I'm completely new to the game. Then in terms of how I will be splitting my £200 weekly budget into my investments, the aim is to have a core of 5 to 10 stocks which meet those 4 key rules that I've mentioned above. And once I've selected those stocks, then I aim to continue to add to them whenever those stock prices drop. So here, as you can see, we've got renewable infrastructures is down 2.64%. We've got Rio Tinto down 5%, and you've got 3I's down 0.62%. BHP is also down 3.63%. So in my view, those stocks I will be adding to them. I'll be buying some more shares in them in the proportion to which they are down. So the lower they go, the cheaper, in my view, they are, and that means I need to be investing more into those. And if I've got anything left over after doing that, then I will add some more to Bellway, because I think Bellway is also still at an undervalue at this point in time. So that is how I aim to invest. And so this is really just an introductory video, and I shall take you through my strategies and my role in the forthcoming videos. I'll break down particularly how I've chosen these individual stocks one at a time. I'll probably dedicate one video to each of these stocks, and in future videos I will then show you how I pick future stocks as well. So hope you enjoyed this very short video, and hope you'd subscribe, and please like this video, and hopefully I can grow this channel, and people can benefit from my experiences and how I learn through this process of investing. Thank you very much, and remember, it's better to be last than never to invest at all.